สวัสดีค่ะ Hello everyone, good morning. Welcome to PTT EP Set Digital Roadshow. Today, we are privileged to share with you our performance of our third quarter of 2019. Today, joining with us our management, Kun Chanamat Sasnanan, our Senior Vice President in Finance. And then myself, Nut Anong Sangkao, VP in Capital Market and Investor Relations. So today's story, we would like to share with you on three main topics to update you on the industry trends. And second would be our update on strategy and growth. And then the third would be the financial performance of the 9 months for 2019. So Kun Chanamat will share with us the industry trend and the update of our growth.
Hi everyone. Thanks again to joining our Set Digital Roadshow for the third quarter. Again, as normal, that we would like to update you about what we are looking at the oil price, which is highly quite impact to the E&P industry. What the company have looked at the oil today, I think it's gonna be still volatile, but in a very tight spread around 60 to 70 US dollars per barrel. There was a lot of key factors that we need to closely monitor about it. On the negative side, you will see that the concerns is more or less on the demand side regarding about the global economy that not seem to be quite clear yet that whether the global economy will pick it up that soon. There was some key major event that still happen around the world, including US-China trade war, the non-deal from the Brexit, whether the UK will get out from the EU or not, and also the government policy on economic stimulus measurement, that how the country will try to encourage the people in all the country to get more demand on the energy side. So three of the key events that gonna be driven on the demand of the oil. But again, there was a positive side on the oil price as well, that probably you will see that OPEC have extended the production cut, and about the US, the geopolitical tension in the Middle East, that quite bringing the oil price have to be shooting from time to time. So all in all, I think the company still look at the oil will be trading around 60 to 70s. And on the right hand side, you will see the graph that got to be support about the oil consumption, that globally they expect that the growth of oil consumption have been declining for over almost the past 2 or 3 years from now. And also the below that show the OPEC still have a production cut policy. That will more or less are the factor on the oil price that we have to keep monitor. I think a lot of people have been concerned on the IMO 2020, whether it's gonna be impact to PTT EP. As you may aware of, the IMO 2020 have been impact on the fuel oil. There's a policy on the International Marine Organization that's gonna be launched that they would no longer allow the vessel or the ship to use the high sulfur fuel oil, which nowadays they allow at 3.5% sulfur. At 2020, which is next year, they're going to be lower than 0.5%. So this is going to be impact to the fuel oil price, and a lot of investors have been concerned on PTTEP gas price because they know that one of the key factors or the indices that our gas price have been tied to is a fuel oil. Again, this IMO 2020, of course, they're going to be impact on the price of the fuel oil, since the demand of the high sulfur will be lower, and we expect that there's going to be a lower price in fuel oil in the next year as well. However, in terms of the impact to PTTEP, we would say that it's a very limited impact, especially on the 2020 or the next year, The reason for that, I think the right-hand side, we have showed a very a graph that will explain that how we think that it's going to be not significant impact to PTT EP portfolio. If you look at the PTT portfolio nowadays, 70% have been tied to gas, which going to be some of them will be impact to the IMO 2020. But again, if you know that the 1/3 of the gas price have been linked to the fuel oil. So again, the 70% of the port, only 1/3 will be affected to the fuel oil adjustment. So it's going to be lower down from 70% to 23% of the portfolio will be impact to the high sulfur fuel oil. But again, you know that if you are our investor will be well aware of that our gas price have been vary project by project. They're going to be reset the gas price every 6 months, 12 months, and they will use the past movement of the oil price instead of the spot price. So some of them have been adjusted to the past, movement of the oil price 6 months, 12 months, or even 24 months on some of the projects. So I would say that at 2020, in the year 2020, only 35% of our port will be affected, will be reset, will be affected to the price adjustment. So down from 70% of the gas portfolio, only 1/3 linked to fuel oil, down to 20%. So with the lag time, only 35% of the port, or 30% of 20% will be down to the 8%. And this is not, if you take out all the expenses, tax and royalty, it's come down to only 4% of our portfolio will be impact to IMO 2020 by next year. So this is well explained that why we think that it's going to be less impact to PTTEP in terms of the gas price. Again, after 2022, after our PSC have been, our concession have been expired, and then some of the projects like G1, G2, or Bongkot Area 1 that you may be familiar with, again, nowadays, those gas prices have been tied to the high sulfur fuel oil. But after 2022, after the PSC have been activated, all the gas price will be linked to the Dubai. So I mean, after 2022, you will see that less in portfolio on the gas price will be linked to high sulfur fuel oil. So I think that in terms of IMO 2020, I think the company have been less impact on that side. And again, we have do some hedging for this year as well. So part of our gas price have been hedging to mitigate about the risks of IMO 2020. After we talking about the oil price and the effect of IMO, I would like to keep you updated and head up on our strategies. I think we have been very successful in the past 9 months about our execution, the strategy about expand, execute. I think we are very successful in the expand side. We have been achieved a lot of additional production volumes coming in from our past merger and acquisition, the M&A, in some of the key transactions, including the Malaysian asset that we acquired, the Murphy Malaysian, have been successful completed at the first half of this year. And again, the Partex that we have been acquired, and we get to expand a lot of projects in Middle East as well. This have been completed due since November. And after we, achieve and we win the bid of the G1 and G2 Bongkot Area 1, I think we have been completed or successful in expand strategies. So from now on, I think the more or less in the major activities of PTTEP will more toward to the execute strategy. That's included to ensure the smooth business transitions on the 3 key projects that we have been acquired. Including the Murphy, and nowadays we have included all the Murphy asset to our existing portfolio in Malaysia. So we call all together is Malaysian asset. And the transition about the Partex that we have been acquired as well, and try to smooth business transfer of the existing operator to Chevron on the Area 1 side, just to make sure that we can deliver one as the gas committed by the time the concession have been expired. So this is more major activities that are going to happen from now on until the end of the year, and will carry on to the next year as well. And this is very important that we have to make sure that our business have been, the business that we have been acquired will be achieved as planned. The other side of the business transition will be accelerate on exploration activities. I think PTT as an exploration production company will still very high concentrated in exploration activities as well. That we believe that exploration activities will give us in terms of the longer term, in terms of production volumes that the reserve that's going to come in for the mid-terms and the longer term for the company. So we would like to focus on the two key main area that we think is second home of PTTEP rather from the Thailand. That's what will be Malaysia and Myanmar. You will see a lot of active activities from now on until the next year. We're going to be heavily explore in a lot of exploration wells in both in Myanmar and Malaysia itself. The reason why we are very concentrated in Myanmar and Malaysia is because of we not have to worry about the market of two countries. That in Myanmar, you know that the country have been hunger for the energies, and they have a demand of the energy in the longer term, because the government would like to speed up and would like to see that all the people in Myanmar have electricity use in the future as well. So the demand side on both Myanmar and Malaysia is not a question. I mean, the question is that whatever you can find, any gas or any oil that can feed up to the demand of those countries. That's why we would like to highly focus on those areas. And you will see that we're going to announce the 5-year investment, including, it's a regular routine that PTTEP will update your 5-year investment and production profile, the sales volume profile guidance by the end of the year, and you will see that all the budget will be including in exploration in Myanmar and Malaysia as well. And this more head up on the strategy side, that we are very busy in business transitions and also the busy in exploration activities. Now I will hand on to Kunut Anong. She will wrap up the performance on the third quarter.
Thank you. So for the third quarter, when you see the 9 months performance, comparing, this is the 9 month 2019 comparing to the 9 month 2018. In terms of the key factors that drive our performance, there are, three things. Basically the volume, the pricing, and of course the unit cost. In terms of the volume, you will see on a 9-month average for this year, the volume has been increasing 12%. The majority of that increase is dedicated to the expansion that we have completed. One is the Bongkot project that we have acquired 22%. That was done last year in the middle of the year. And of course, the latest Malaysian acquisition that we completed in July this year. So that, have resulted in the increase in the volumes. And as Khun Chanamat mentioned, we expect the volume growth to continue to next year and to the following 4 or 5 years as well. In terms of pricing, if you look at a 9-month average of 2019, you can see that the Dubai price, the oil price in general has come down. However, with that benefit of the lag time, our gas price still remains strong. The gas price is $6.9 per million BTU on average for this year, and we expect to stay at that level till the end of the year. So the gas price has been strong and hold up. So that's why even though the liquid price for our portfolio is down, the weighted average is still up a little bit comparing to 2018. And in terms of the unit cost, we are, of course, that's one of the main strategy on executing, is that maintain that competitive unit cost that we always focus on. So in the 9 months of 2019, we'll still have unit costs, be able to maintain unit costs around $31 per barrel. We would like to maintain at that level at $31, $32 per barrel for the end of the year. On the last box is the funding, the use and the source of fund for this year. For this year, we have the operating cash flow of around $2.3 billion with, the refinancing activity and of course the usual dividend payment. But this year we have extra of the business acquisitions due to our expansion strategy. So the use of fund is about $4.8 billion. This is include the business acquisition of $2 billion. And then the source of fund is 2.8. So you will see a negative cash. However, as you may already aware, at have $4 billion on hand. So with this, even though with this negative cash usage, we still end up with $2 billion for cash on hand at the end of 9 months. So that is pretty much very well covered because for our working capital, we only need about $1 billion. So we're still pretty good. And speaking about that, the debt equity ratio, the leverage ratio is still quite low at 0.18, less than 0.5. So we'll still have a lot of debt. We need that cash. However, if you look at our operating cash flow and the acquisitions that we've been completed, those are producing assets. So it is self-funding generated cash flow. So we wouldn't have to worry about the cash flow that we would need for those capex. And in terms of profile, this is still the same. We still have 100% US dollars debt as we are US dollars functional currency company. And for the guidance of the rest of the year 2019, the volume expected to increase. So overall for 2019, we expect around 345,000 barrel per day on the average, and the gas price at 6.9. The unit cost would be around $31 per barrel, and the EBITDA margin, of course, we are able to maintain at 72 to 75%. So this is the overall guidance for 2019. So we'll release the new guidance for 2020 once we have the result, the update of our Capex plans and our volume guidance later in the year. Thank you very much. And I think we have a question from online. The question is that, how about the plans for the next 3 years until 2020? Will you still focus on Myanmar and Malaysia area?
I would say yes, because the Myanmar and Malaysian, as I said, that we have, I think it's a very competitive in terms of the, one thing is Myanmar and Malay have strong demand on the energy side, especially for the gas. As I mentioned before, the Malaysian, they will need a lot of gas to feed up to the LNG plants. That would be, have a more capacity available on the next 3 or 4 years from now. So I think they have a very strong demand on the country. That's for the marketing side. But the second, the reason that we would like to concentrate in Myanmar and Malaysia is because of our expertise in those two countries. And that the area that have we believe that still have very low cost of operation. That's why we quite believe that we can maintain our unit cost in the level at Khun Nudatong just mentioned, and we still be the top quartiles on terms of the low cost operators. That we still believe that the area of Myanmar and Malaysia will give us the opportunities to achieve the competitive advantage on that side.
Okay. Seems like we have no further questions for today.
Yes, I think just to wrap it up, I think the third quarter is still be a very good quarter for us, and I think throughout the year we have additional volumes coming from both Murphy and Partex that will make our sales volume uplift our sales volume including the reserve as well, that we're going to be announced the reserve by the end of the year as well. You will see that there are going to be 3 key projects coming in. Mozambique that we have already FID will have additional reserve life for us as well. The Malaysian asset and the Partex. So I think it will be a good year for PTTEP. We have very achieved in expand strategy. And again, we believe that within this kind of, the volume nowadays, we believe that we could deliver to the shareholders for at least 5 to 7% CAGR on this term of the growth of the sales volume. So I think keep it up with PTTP. I think we still have a very good news both of the end of the year and the year coming in as well. Okay, thank you for today.
We have one more question just came in.
Okay, sorry.
Okay. The question was that could you please give us more details on the Capex plans for the next 3 years?
As I mentioned, I think after we included the Murphy asset, the Malaysian asset, and in the Capex plan, I think our investment on the Capex side will be, for the next couple of years, should be about 1.8 to 2 billion US dollars. And majority of the Capex will be again in the maintenance Capex for our producing project, more or less on that side. But again, as Kunanudon just said, that we're going to be announced the 5-year investment plan within the end of the year. So I guess we're going to see that our Capex, that's going to be included our exploration activities and including the Partex as well. And yeah, that's going to be more or less on the details of the Capex plan of 3 years. I don't know, Kunanudon would like to add something on that?
Okay. So like Kun Chanamat mentioned, it's about 2 billion US dollars per year for the Capex. And as you know, with the oil price at this level, we expect our operating cash flow to be more or less, more than 3 billion US dollars. So not to worry about our funding structure or our cash flow needed, because the Capex is very well cash flow, and the acquisitions that we have completed have been self-funded already. So it's more or less our focus on explorations, getting those exploration and get the quicker time to market and monetize all those success. Yeah, I don't think we have any more questions. So thank you very much, everyone. And see you again in the next year to see our 2019 results.
Thank you.
Thank you.